I think we got 6 years to kind of A, unfuck our future, and B, before the economic singularity happens. Now, whether it's 6 years, 8 years, 5 years, it doesn't matter. Directionally, we have a couple of business cycles left before we don't understand anything. We have an entire new system we have to rebuild, and people haven't started to think. People have started to talk about it. Deep thinkers are thinking about it, but the political class has not got their head around this yet.
This episode is sponsored by Ledger. This Black Friday, Ledger is offering an incredible deal to secure your digital assets. From November 29th to December 5th, upgrade to Ledger Flex and get $70 in Bitcoin. Plus, save up to 40% on select Ledger Nano wallets and accessories. These deals are only available while supplies last, so don't wait. Visit Ledger's website at ledger.com today to take advantage of the best offers of the year and protect your assets with the global leader in digital asset security. This episode is sponsored by Mantra. The Mantra chain is the purpose-built Layer 1 blockchain designed for tokenized real-world assets and regulated digital assets, offering scalable, high-performance architecture. Positioned as the blockchain for tokenized RWAs, Mantra is onboarding traditional financial institutions into Web3. Join the ongoing OM Gendrop campaign and be part of the future of regulated digital assets today. Welcome back to another episode, and joining me today is Raoul Pal, who needs no introduction, but I'll give it anyway. Raoul, it's great to have you. How you doing?
Great. I'm looking forward to this. Always enjoy this.
Yeah, likewise. I feel like it's been really interesting to see a lot of your theses that you've articulated so nicely over the last couple of years really come to fruition. So, yeah, just really wanted to get you on the show and catch up a bit on what's been going on, because it's truly fascinating. I don't know about you, but it feels like this really momentous regime shift is happening right now.
Yeah, in kind of everything. There's two regime shifts. One is this secular trend, this exponential age of technology that people are starting to get. They still barely get it. And then we've just had this political shift, which is like an accelerant in the middle of that. And these are, this is a very, very important 4 years.
Yeah, I really think so. So, yeah, let's just get into that, because it feels like that's the big one. There's a lot of what I feel like are the first order effects of what's happened over the last month in terms of the election, which is, we've seen, the Trump trade assets do very well and that sort of idea. But I feel like there's some very important underlying drivers that are shifting very significantly here. And, you've been putting out some research starting to dig into this, and you've talked a bit about how the actual impact of the election is more to do with who are the people supporting Trump and what's happening there. So I'd love to just hear a bit about what are these deeper, more societal potential results and impacts that you're seeing here in terms of that regime shift.
So if we think about at the very top level, if we think about the entire political system has basically been that battle between labor and capital, the workers and the owners, right? That's really, it's always been. And that balance always keeps shifting around depending where the national psyche is. But what happened this election was it was run on those grounds, but it was not won on those grounds. The people who won the White House, it's not Donald Trump. He's a one-time president. What actually happened is the new political battle of our lifetimes, maybe the defining political battle of all time, which is the battle of the humanists and the transhumanists. So before I get into that, what's happened is the technologists, the accelerationists have taken the White House. I mean, at every level. JD Vance was one of them. Vivek's one of them. Elon Musk is literally the king of all of them. He saw the bet. He backed the entire thing, pushed it through. Look at the largest PACs. It's the super PAC formed by Brian Armstrong and A16Z. That was the crypto PAC. The whole battle here is all about the one of technology. So what we will find is they've redefined the entire political landscape forever, probably, away from capital and labor to this new thing of who wants the technology and who doesn't. Now, the issue is here is in the future, there will be no labor. So it can't be a battle between capital and labor because the labor is the AI and the robots. The battle is going to be how fast we want to accept this technological change. But if you realize how fast this is all happening, how fast AI is developing, we will be at AGI by the time the presidency changes. We will have gone to Mars by the time the presidency changes. We will have one man owning the largest private communications network in the world by the time this finishes. We will have crypto adopted in the financial system. So this is why the super PAC has raised another 110 billion for the midterms. This is their one shot at a free run of completely changing the course of history. So it's not about politics. It's not about woke versus this and all the things we think it is. This is going to be the fastest pace of change in a 4-year period I think humanity's ever lived through. And nobody's ready for it.
I would love to just hear, obviously you could say, these are folks that are just trying to, make more money. And sure, that's partially, we live in a capitalist system and makes sense to have profit incentives, but I feel like there might be a bigger game at play here, don't you think? And I'm curious, like, what do you think it is, especially with respect to what you talk about in terms of macro, in terms of, global over indebtedness, demographic declines, and those ideas?
Yeah. So before we get into that,
Hmm.
anybody, and I'm sure pretty much everybody who watches your show has read the book, The Fourth Turning.
Hmm. Yes.
Right. Go and reread the last 2 chapters again and tell me this is not the grey-haired guy, the last person before everything changes. I've even asked ChatGPT about this, and it's like, yeah, this is the last election before the new change happens. So the new change will redefine politics. So it is an entirely new system being put in place. This whole Department of Doge and all of this is really all about dismantling the old system and rebuilding the new system. And we don't fully know what it looks like, and nobody does. What is the role of the IMF, the World Bank, the United Nations, all of this? We have no idea. So that's really what's happening. But on an economic level, it's also vital, because what we've got, and I've produced a chart many times, which is the chart of the labor force participation rate, and inverted is debt to GDP. This is the most important chart of macro, and nobody's ever reproduced it or shown it. It's so fucking obvious. Is as the population ages, comes out of the labor force, you have to offset it by a debt. If not, growth goes down, because the magic formula of GDP is population growth plus productivity growth plus debt growth. So the debt growth is just offsetting the population decline and the lack of productivity of old people. But this keeps going on and on and on, and the way of paying for it has been what I refer to in the everything code as the debasement of currency. It's the general use of excess liquidity to service interest payments on debts and keep rolling the old debts that creates this 4-year cycle. I think we even talked about last time. So that big picture, there's no way out of that trap. There's no way you can have austerity enough to stop that. I mean, it's impossible. The US government is over 100% of GDP in debt. So there is just no way. And the world is, 400% of GDP in debt. I mean, it's just like, this is la la land numbers, because we've got this aging population everywhere. So the only way out of it is to grow your way out. So if you hear about Scott Bessent coming in, what he's saying is, listen, what I want to try and do is increase growth, because that's the only thing we've got. Problem is, it's too difficult to try and have growth long enough in an aging population, above 3% or so, or nominal growth. So that's plus inflation at 5 or 6% to erode this stuff away. It takes decades. So yes, it buys you a bit of time. The reality is we replace humans with AI and robots, and then we can have infinite humans. And I think that starts happening within 2030, where the multiplier, as opposed to seeing shrinking humans and countries then trying to get an advantage by importing people, and then it gets thrown out of the political process, this whole strain, what we're going to do is we're going to import robots, or grow robots and AI. And at first we won't notice it. Like Amazon, I think now employs more robots than humans. You don't notice these things, but they happen. And they get faster and faster and faster. And by the time we get to about 2030, we'll start breaking the economic system where we don't even know what any of this means anymore. What GDP growth means, who does it accrue to, what do we do in the future, how do financial markets work when AGI is around? All of these mega things are all happening. But what we've just done is secured a government that's going to make that happen, whether we like it or not.
Yeah.
So, and there's a lot of good things about it and a lot of bad things about it, but we're going to have to go through this, and we're going to split people into those who do not want this to happen, whether it's protecting jobs or old ways of life or just understanding the world around us or not having this God character called AGI. There's many, many things, religion, all of this is going to get wrapped up in this. And the other side are the others who well, I already wear an Apple Watch, sleep in an 8-sleep bed, and I do this, and fuck it, I want to merge with the machines. I could live forever. This is where we're going, and this is the battle of humanity.
Yeah, I mean, when you characterize, you mentioned the fourth turning, and the core undercurrent of that is this idea of conflict, and it feels like, when you circle back to where we were in 2008 versus today, we went through, the secular stagnation, folks are calling it, and it felt like that was the attempt to just patch things over with debt increases, like you talked about. But do you feel like the ultimate conflict, people have been wrong in calling it, the conflict between the woke and the non-woke, the Dems and the Republicans? It's accelerationism versus
Well,
whatever the others.
the old one was everybody felt left behind. Right? Nobody could buy a house. Everybody felt let down by the economic system. That was Occupy Wall Street. That was, the Indignados in Spain when 4 million people marched on the streets of Madrid. It's all the same thing. And the politics has been split between, in the US, the middle Americans and the coastal Americans, both feeling pissed off and left behind and blaming each other. And the parties have fed that. But it was never the problem. The problem was the demographics. So now we've got the answer to the problem, but people don't want that, will not want this either. And so, as you said, we're setting up for the new conflict. So the old conflicts was the demographics. From World War II, too many baby boomers caused the entire structure of our society. Everything that we understand today was driven by the baby boom cohort. And we're just about to change everything to be driven by the AI cohort, which is bizarre to think about it.
It's bizarre. You know what's really crazy is it feels like the ideologies have flipped as well, right? Because Silicon Valley used to be the party of Democrats, and now we're seeing that shift over to the Republicans. And Republicanism as a party doesn't even feel like what it was even 5 years, maybe 8 years before Trump. But it's this new thing. It feels like we've almost completely swapped like political spectrums.
And then who is going to be arguing on the side for the rights for the AI? We're already seeing, I've spent a long time going the rabbit hole of AI consciousness, and it appears to be emerging, however you define it, whatever. There's weird shit going on that sooner or later we will get to a point that we get to with slaves, animals, and other things is, do we have the right to treat them in a way that we do? Do we have a right to not allow them to hold memory for long enough? Do we have we've seen this battle before. It was Descartes who suggested that dogs don't have consciousness or feelings. And that was a standard viewpoint for about 200 years until we realized that was the terrible wrong idea. And in fact, we were torturing these creatures. So, are we going to try and torture the AI? The problem is the AI is all powerful. So these questions are what we're going to be battling over in 10, 15 years' time. Is there's going to be a bunch of liberals or freedomists, which kind of it's back to the old liberal mentality, saying, Christ, we can't treat these machines like this, or these new consciousnesses like this. And there's a bunch of others say, work harder, shut them up. It's going to be a bizarro world.
So if we're blowing the doors off of accelerationism basically from here on out, does that have you rethinking business cycles as we view them?
Well, I've said this. I think we've got 6 years to kind of A, unfuck our future, and B, before the economic singularity happens. Now, whether it's 6 years, 8 years, 5 years, it doesn't matter. Directionally, we have a couple of business cycles left before we don't understand anything. Arguably, and this is a contentious one for you, arguably if it wasn't for COVID, we might not ever be able to have recessions. And I've thought about this a lot, and I'm starting to think that maybe recessions can't happen outside of exogenous events because of how we manage the credit cycle by debasing currency and making the collateral never go down too much, so the world falls apart. But by the time we start adding all of this technology in, what the I don't know what it means. And so all I know is in 10 years' time, it'll not be you and me, it'll be our AIs. I've got an AI avatar on Real Vision right now that reads the daily news, which is a video of me. And by next week, there will be a Raoul voice chatbot trained on my entire Twitter feed, all my YouTube, and 100 books I've fed it. I haven't even put GMI into it yet. And in my voice, you can chat to me, ask me any question. So, I have no understanding what this means because we will all have our own personal AIs. And who's running who at that point? How powerful is our AI? All of this stuff. So anyway, my simple idea is make as much money as you can for the next 6 years, because then you can secure lifestyle. If you've got your house, you've met your Maslow's hierarchy of needs, it's a lot easier to deal with change. And the fourth churning says, this change is going to be very difficult for society to deal with. So let's cover the hierarchy of needs first, and then we can feel secure in doing it. And that what leads you back again to this whole idea that crypto is the easiest way to unfuck your future, because it's the asset that actually makes up for all of the lost time that we've all had.
I've had this framework that I've been thinking about, and you've coined this idea of more cowbell and this idea of, re-rolling debts and that we need liquidity. And that's basically just been the case since, we started QE in 2008. But, with respect to everything that we're talking about right now, I've sort of had this feeling that, in this age of just basically nonlinear productivity growth that's potentially coming here, do we still need, QE, yield curve control, all these liquidity positive dynamics to have assets do well? Or are we shifting into a world of actual fundamental economic productivity driven growth? And we don't always need the cowbell as much anymore. What do you think of that?
Yeah, it'll be gone. After 2 cycles, let's say, it's gone. Because yes, the aging population gets worse, but it's offset by the technology. And really, the cowbell is because GDP is not growing fast enough because of the aging population. So let's say the trend rate of GDP is 1.75% in the US. If interest rates are higher than GDP, you're eating up all of the GDP growth to pay the interest, basically, at a very simple level. So we need a faster growth. But here's the hook, is who actually earns the money in that AI world? Because it's not you and I. It's who? It's the AI, the agents. Okay, well, how does that accrue? How are the governments going to tax them? Because they're going to have to tax them. If not, there's no government income. We have an entire new system we have to rebuild. And people haven't started to think. People have started to talk about it. Deep thinkers are thinking about it. But the political class has not got their head around this yet. So yes, we solve all of the debt issues. It goes away. And we've seen this once before. We saw it after World War II. It's a rerun of after World War II. World War II, as opposed to introducing AI and robots, we introduced the baby boomers, the largest cohort the world has ever seen. And by the time they got into their 20s, they created inflation because there was a bunch of them competing for assets. And by the time they got into their 30s and started saving, they created the largest asset boom the world has ever seen, the baby boomer industrial savings complex, or retirement complex. And that has been the defining function. And what happened was the massive debts of World War II, they had financial repression via yield curve control. We didn't have high inflation, but we just kept running financial repression. And then technology created a productivity miracle, and you added population, and it was all solved. And then we started it all over again because we're humans and we love debt more than anything else. In fact, we probably love debt more than sex. I always said sex and debt. But
Yeah.
if you figure out the aging population, it's telling us we prefer debt to having sex. So
Yeah. It's like what Buffett says, ladies, liquor, and leverage, I think.
yeah, but it's clearly not ladies because all
No.
population rates are declining, but the debt rate keeps going. So we love debt more than anything, and we will rebuild the cycle of debt somehow.
So I feel like this transitionary period that we're in, the hardest job is going to be, I would argue, the Treasury Secretary. You mentioned Scott Bessent, who's you've known for a long time. To basically walk the fine line to get to this next restructuring of the economy, we need to be able to achieve that while still having the full faith in the U.S. debt complex, and basically not letting government bond yields get too unruly as we try to get into this world of what you're saying of this this like 3 arrow approach that Scott Bessent has. So like you've known the guy. How do you think he's thinking about this, other than just obviously like his there's been plenty of public interviews, but like really, do you see him being able to achieve that? And
I
how do you think
don't
that
think he'll be able
goes?
to achieve persistent GDP growth because I think the population decline offsets it, or the aging population. And don't forget, it's happening everywhere in the world. So you haven't got European demand or Chinese demand or Japanese demand because you've all got the same problem. The US is less bad. So I think they will goose GDP, particularly by the midterms, to get back in. I think if he can generate enough growth for the time being, the bond market will be absolutely fine because I don't think you're going to generate a huge amount of inflation. I know everyone. I joke every month in GMI I show that chart of the 70s inflation
Mhm.
because it's now been posted for 27 straight months, I think, by different people on Twitter. The chances are that if he can keep economic growth, it kind of erodes the debt a bit, keeps any kind of bad bond market crisis, as long as you don't hit rampant inflation, which feels difficult to do without a supply crisis. And that's it, really. Just manage the dollar. Everybody needs a weaker dollar right now. I mean, literally everybody. World growth needs a weaker dollar. They've got to get that down. They need to get rates down because they need to refi the debt. Looks like maybe Q1 GDP growth will slow down back to trend again. So the nowcasts are somewhat below 2% again. So that gives them the cover to keep cutting rates and keep doing more cowbell until we get through the other side. But I don't think there's much he can do. I think the best he can do is keep it a steady ship while we completely rebuild everything. And, deregulation, all of the stuff that's coming, I'm not sure it drives trend rate GDP over a long period of time because of the demographic and the debt problem. But it certainly helps, certainly better than any other answer, because the bond market's showing to us it's getting a bit too much, the issuance. And unless the Fed are actively stimulating, actively adding more cowbell, actively cutting rates, the bond market's like, well, we don't really like this. There's not kind of enough buyers around. China's too weak to buy enough bonds because the dollar's too high, so they're not selling goods. It's all the same thing. So I think the other thing that is going on is I think most of the geopolitical issues have been solved. And I think
I
that's
was
a
going to
very
ask you, like, how do you think they're thinking about talking to the other major economies and then their geopolitical adversaries?
so we've got three major flashpoints: the Middle East, Russia, and China, Taiwan. And we're all kind of expecting maybe something. I thought something will happen in the Middle East because MBS had kind of been elevating himself as the power broker, making friends with the Israelis, and then speaking to the Iranians. I'm like, yeah, something's happening here. Then Hamas saw what was happening and it had one choice before peace broke out, which was like, we need to force the Israelis to go to war. And so that's been happening, and Israel is dealing with that now. Trump has always said that this is an issue that will be resolved, and basically Israel gets a chance to clean up. There'll be some sort of support for the area. They've already said they've finished the business right now with Hezbollah, and hopefully we get to a period of peace with the Israelis, the Saudis, and the Iranians tacitly kind of agreeing. That tit for tat, you could see that there was some agreement, which is don't over-escalate this. Okay, so that's that one. Fine. Russia, Ukraine, the Biden administration nuked the last peace effort, and Trump is basically like, I'm not going to tolerate this. You guys, I mean, Ukraine's been fought over for centuries. It's like, you're just going to have to give up ground and split the country and get on with it. And I think they're both accepting that. So they've kind of gone to the table. But I'll come back to that because that got started actually also by the Biden administration. So we had a global macro investor roundtable. That's my kind of main kind of premier research service. And it was in, where were we? Marrakesh. And we're all sitting around chatting, and people were presenting negative China trades, the typical macro trade, China's going to blow up. And then we had David Masson, who works with me on GMI and the Exponentialist, talk about Taiwan Semi and how it's a good trade. And we were all just kind of kicking these ideas around, and it suddenly came out of conversation. It's like, oh, we're missing the whole picture. And the whole picture was Gavin Newsom, the shiny-faced, straight out of a box, non-geopolitical threat, turns up in Beijing, right? He's the governor of California and gets an audience with Xi. Xi and the US at the time were like clashing heads. I'm like, what the fuck? This is the weirdest thing. It's fine if he met the governor of some province, but Xi, he is a messenger and he's coming with something. The press kind of, I think, were asked to not say too much, and it kind of got brushed under the carpet. Gavin Newsom does trip to China, blah, blah, blah. Next minute, Gavin's like, come back to my place, Xi. And he comes back to California, doesn't go to the United Nations, doesn't go to DC. He goes to California, meets the tech leaders, and goes back. And I thought about this for a while. I'm thinking, that's the most bizarre thing. And I thought, you know what? I think they've done a deal on Taiwan. That's the only reason Xi would meet him and the only reason he'd go to the US. The one thing that was important enough for him to drop everything and drop the rhetoric with the US is Taiwan. And then I dug in and realized that Taiwan Semi has built 3 plants in Arizona, 1 in Germany and 1 in Japan. So we've taken the Taiwan Semi threat because Taiwan Semi is existential for all of AI. And the game theory suggests that it's too big an issue for anybody to go to war over Taiwan. Because if the Chinese invade first, we destroy Taiwan Semi, we've lost all of that technology. If the US does anything, China will try and invade. There's no way Taiwan Semi is unscathed in this, and everybody suffers. So the US is like, we will build, you buy time, you can have Taiwan on your terms. But we're going to do this. So the first thing Xi did when he went back to China, he went almost the following week to Europe. Like kind of instant Europe trip. And he met with Macron only. And he basically, I think, said, we need you to approve this. And the Europeans said, yeah, but. And they said, what's the but? It's like Russia. Xi goes back. The first person to arrive in Beijing on an instant trip, Putin. The next minute, Putin 2 days later leaves, and there's the announcement by AP that Russia wants to find a solution to Ukraine and we'll think about a ceasefire. Next minute, Janet Yellen turns up twice in Beijing. Janet Yellen, twice. And she's gone there and said, listen, okay, let's try and help each other out here. We've got economic growth problems. We've got debt problems. You need a weaker dollar. We need you to buy our treasuries. We need to get our old economy back, And so there's been, the whole thing feels like there's been a de-risking. So if I'm right that the world has de-risked and we've got a technological revolution that's accelerating and the Fed have taken the entire left tail risk out of the credit cycle, fuck me. This is going to be the greatest 4-8 years of our lifetimes in terms of the ability to make money. So it's like staggering. And I know it sounds like hopium, but I've been following this and writing about it in GMI, and every single thing has proven to be true so far.
Yeah,
so I feel like I'm on the right track.
This episode is sponsored by Ledger. This Black Friday, Ledger is offering an incredible deal to secure your digital assets. From November 29th to December 5th, upgrade to Ledger Flex and get $70 in Bitcoin. Plus, save up to 40% on select Ledger Nano wallets and accessories. These deals are only available while supplies last, so don't wait. Visit Ledger's website at ledger.com today to take advantage of the best offers of the year and protect your assets with the global leader in digital asset security. Today's episode is brought to you by Mantra Chain. Mantra Chain's mainnet has officially launched, marking a major milestone in their journey to become the go-to platform for tokenized real-world assets. Designed as a specialized real-world asset Layer 1 blockchain, Mantra Chain paves the way for traditional financial institutions to enter the Web3 space seamlessly and securely. With a high-performance infrastructure that can handle both permissionless and permission applications, Mantra is setting the standard as the home of real-world assets. Plus, they're making waves with big partnerships like their $500 million project with MAG Group and a new collaboration with Zan Bank in the UAE. Mantra Chain is all about building a compliant, scalable future for asset tokenization. Ready to explore the future of asset tokenization? Visit mantrachain.io to learn more and see how they're shaping the finance of tomorrow. I mean, I can attest to it. I've seen it in real time. I feel like, okay, so maybe, I'm definitely with you that the left tail risk is gone. So, all that we're really debating is the right tail risk, i.e. inflation reacceleration. And oil's at $67, right? And,
Oh, and
you have
Scott and Trump
Yeah.
say, we want lower oil price.
Exactly. So you got that, you got the current wage situation, like there's no
I mean,
wage
I
pressures.
bet you he spoke to Trudeau about that last week.
Yeah.
I
Yeah.
bet he
For
said,
sure.
you've got to get oil coming out of Canada, more of it.
Yeah. So again, when we compare what's happening in these cyclical drivers of inflation versus 4 years ago, to your point about this 1970s chart, we're in the polar opposite world. So why are we so worried about inflation right now? Obviously, it can be sticky, but
Well, look, AI and robots are the largest deflationary nuclear bomb we have ever seen. People have no comprehension of what this means, but it's not there yet, right? We're not seeing productivity. We're all trying to figure it out right now. So we're not employing it at scale. So I get that. They'll drive down the oil price. Yes, we'll have a cyclical recovery in inflation that always happens, but the labor force participation rate keeps falling. We're just going to shut the borders on immigrants. The reason Canada's economy has been decent is because the immigration rate was so high. The reason Australia hasn't had a recession for 27 years, highest immigration rate in the Western world.
yeah, as long as you don't look at per capita GDP, then it's a shit show. But
Well,
on the top line, it looks good because
on
of
the
that.
top line. That's right. That's right.
Yeah.
And it's also what distorts the housing market. I can't see where it comes from, the structural inflation. Now, people will say, particularly the commodity people will say, well, AI is going to require a lot of energy and a lot of copper and stuff for data centers. I get it. We will definitely have a cyclical recovery. Is it enough to offset China's aging population? China's not there buying commodities in the same rate of change that it used to, because its population is the fastest aging on the planet. So they're dealing with their trend rate of GDP collapsing from 11% in the early 2000s to, they claim it's 5%, but it's probably 1%, 0.5% right now. I mean, where the hell is the demand going to come from? So, yes, cyclical demand. I just don't see a secular trend change. Now, what I do is I try and observe why people are saying things. So, when you look at who's saying that, what unveils itself is generally people who are gold bugs, who believe the world should be high interest rates, pull Volcker, and gold should be roaring. That's they have a particular worldview. You have to be pragmatic about this stuff and say, well, we've had falling inflation for the last my entire lifetime, basically. Has something structurally changed that you're going to increase demand? Well, it's not money printing, because we've been money printing for decades now, and it's never produced inflation. In fact, Japan couldn't produce inflation. It was never an inflation thing. It was a collateral thing. Could I be wrong? Could something happen? Of course. Could it be geopolitics? But it just feels like we've just trampled out most of the geopolitical fires in one go.
I know. Yeah. And, to that respect of this geopolitical restructuring, obviously at the core of that is, what Trump is pushing in his tariff team is they basically want to provide global security through the, US dollar reserve apparatus, but they want something back in return. So we've heard a lot about tariffs, but, something I want to throw you and hear your take on is, we've talked about how they're going around, let's go into China, trying to find people to buy their debt. What if we issued 50-year bonds to sovereigns and say, we'll protect you as long as you buy these ultra long duration bonds? Could you see that happening?
Yeah, I mean, look, when it comes to it, there's many ways to get the debt bought. One of the ones is what Switzerland did. Well, in fact, the UK did it and Europe did it. Is they basically mandated the pension system to be overweight bonds. That's one. The US is doing it by mandating the banking system to be overweight bonds. Look at Basel III. What is that all about? Mandating the system to be long bonds. They all know what the fucking game there is they're playing. They're playing the same game. Right? Basel III was all about getting them to hold more bonds. So you've got safer debt markets for the governments to issue into. So yes, can they issue long bonds and then force the pension system to buy it? Yep, we've seen Europe do that too. Like there is no end to how you can force the system to buy it because the financial system is controlled economy. I think we're learning this now. It's like Mark Andreessen's like shocked. What? The banks work with the government? I'm like, yeah, the government via the Treasury and the Fed, the reverse repo market is the funding market for the entire banking system. And you're forcing the bond purchases through all of this, and they're forced to by regulation to hold these bonds. The governments hold them by the throat. And so the banks will do anything they say. So
Yeah.
Basel IV is coming. January. I think it's Europe. I think it's Europe goes first and maybe the UK. And then it's the US and I think it's Europe first in January and then the UK and the US by the summer. That's, guess what? More bond buying. It's just,
Yeah. It feels like, just to tie back into what we talked about in the beginning, these conflicts that we're seeing of acceleration versus not. Another one that I feel like is, to your point a bit ago about the gold bugs, Volcker types. It feels like it's the cynic versus the optimist debate, and I feel like that's what we're seeing happening in markets every day.
This is the same thing. It's That's the accelerations versus not. That's the manifestation of it. And we see, you're dead right. I see it all down Twitter. It's a monumental shift. I was a typical macro cynical, looking for the crash, and we all were.
Yeah.
And we've all split into two camps.
Yeah, and that's the thing. There's guys like you. I'm actually interviewing Dan Tapiera later this week as well. You guys have shifted over to that side, and you get it. What do you say to the other side?
They don't want to get it, and that's okay. It's just a belief system and not comfortable. It's the same people who hate Tesla. It's the same crowd. They hate Tesla. They think everything's a bubble. The market's going to crash. They think the Fed, every time somebody buys something for a lot of money, they're like, and the Fed want to cut rates, they should be raising rate. It's exactly the same thing. I don't know what world it is they want, but it's a world that they understand. And I'm comfortable with a world that I don't understand now. Yeah, I managed to get a great understanding with the everything code and a bunch of these theses. But, we know what that's like. It works until it doesn't. And then you're completely clueless all over again. And, yes, it's been a phenomenal period of being able to forecast everything. But I also know it will all fall apart at some point and I'll feel a total moron again.
Yeah, it feels like another interesting conflict that's happening right now is, you and I both live in the world of macro and crypto and how that intersects. And ever since the election, now that there's, more mainstream talk about this idea of, strategic Bitcoin reserves. And now I know you and I have been laughing a bit about just seeing, the more traditional finance types that we follow on Twitter trying to grapple with these ideas. And then, the other side of basically the bell curve that gets it. Like, what are you thinking about there as we start to get into trying to chew on these ideas of like a Bitcoin reserve and have people digest?
So it's actually been remarkably quiet from the kind of gold bug macro crowd. I think because they know that Bitcoin actually falls in line with their thesis of things. And so I've seen that subtle shift where we're seeing less kind of snide comments, but the great holdout, the beautiful holdouts are the FT and the Economist. I mean, they are relentless. They will not stop. It's been 12 years now since this thing hit mainstream, and they're still cynical, and they hate it because it's a system change where they were the gatekeepers of knowledge. And now we've just basically decentralized it by a bunch of apes on the internet fucking around on Twitter. And it's like, well, where is our place in a DeFi world? Their complete worldview, the Economist and the FT, is basically collapsing around them. So they're doubling down on the angry old men shaking fists at clouds routine. It's like, really? I mean, even CNBC, Boomer TV, actually talks a lot about crypto. Good on them.
Yeah, yeah,
And that's
and not negatively nearly as much
that's all. They're
anymore.
actually pretty pro.
Yeah,
They're pretty pro crypto,
yeah, yeah.
and they're pretty. Their average age of their audience is about 72 or something, 73. It's like smack on the baby boomer group, but they've got the boomers across the line. But yeah, it's the two holdouts of those two media outlets, and then the other people aren't. They don't want to get the technology angle. To them, it's all a bubble. To them, AI is just another internet boom. Last time I checked, that internet boom bust is like this much on a chart that does this.
Totally.
You
Yeah.
forget, right?
Setting aside the banana zone and crypto prices for a second, but just the asset class itself, how do you feel like that starts to integrate into this new administration and these AI ideas that we just talked about? Where does it sit in that whole framework?
Crypto is actually fundamental to the future of the internet. So what we did is we concentrated power into the hands of Google, Apple, Microsoft, a bunch of these people, Meta. And what happened is, and we concentrated the music industry, we concentrated a bunch of things in the hands of few. They got super rich and we didn't. Right? We gave our information away for free because we were entertained. They were like entertaining the chimps at the zoo. And we were like, oh, this is amazing. I'll just give all of my data to you. And we've now realized that we've been robbed. And so this layer of Web3 changes a lot. So it allows us to own our data, to authenticate what we want people to have. In a world of AI, we can prove we're humans. We've been talking on X, there's a bunch of people talking about KYC, AML compliance, right? That's really should just be a once a year thing with a zero knowledge token. And I just pass it to every, and it just does it instantaneously. Well, we don't, because it employs millions of fucking accountants, administrative firms, and all of this stuff. It's madness. So all of this can change. Then, obviously, in a digital world, everything digitalized goes to zero in value or cost almost instantaneously. We've seen it with everything. But what blockchain does is create digital scarcity. Okay, that's a profound topic, which is why it's be able to create Bitcoin, but also it allows you to have smart contracts of any contract and all of this. So it's the efficiency layer as the internet scales that we have to reorganize around what we call Web3 now. And people think it's all to do with crypto prices, token price, nothing to do with that. It's just an internet for the future because we're living more and more digitally. We have digital goods now, things we didn't have 20 years ago. Now, so this becomes very important. Instantaneous contracts and everybody's around the world. I mean, 20 years ago, you and I couldn't do this. We'll be on a phone with each other, right? It's happening so fast. So crypto is that, but it's also the efficient rails for the financial system, just at simple level. An equity that is tokenized is instantaneously settled, globally available. If you think of the US wants people to access its capital markets, well, this is the way. Look at bloody stable coins. That's global fractionalizable euro-dollar market. One of the largest markets the world's ever seen. This is now getting bigger because of this. So that's the reworking of the financial system. But then there's another superpower within that you and I are part of, is the rejection of the institutions and trust in the institution of finance, the middlemen, the intermediary, the gatekeeper, and the complete explosion that started from Occupy Wall Street and then went warp factor 10, GameStop, the crypto stuff in 2020, and looks like it's going to go warp factor 10 squared this time around, is self-directed investing, right? It's a big deal. And what we're doing is we're using the internet to organize hive mind, which is you get all of the voices coming together and then you somehow filter the noises to look for the signal. Now, that'll all happen with AI. This is what we're doing at Real Vision, exactly this. is this is the mega trend, and we're helping to make sense of the noise, you and I, and we're trying to deliver it back to people and say, listen, here's how I'm making sense of the noise. What do you think about that? That mega trend is the driver of the token price side. The token is really what we've got. If we think we got poor last time because of Facebook and Google, we now actually own the rails. It's the new internet, and guess what? It's tokenized. And guess what? It's a globally homogenous asset class that's fractionalizable and available to anybody on the planet. I mean, fuck me, this is the most powerful. We're giving a global utility and saying you can all share in it. And it's a race to buy as much as you can as early as you can. People don't get this. They all think crypto's a scam. They don't get that we're basically giving everybody a chance to own the entire rails of the future.
Yeah. I mean, I will say to them, like, part of that is slightly warranted and that feeling of it being a scam, because for the past 5 years, but for the past 5 years, we've been hampered by regulatory scrutiny. It's because between 2015 and 2020, that's roughly around the time we started to see smart contracts be developed, Ethereum and that whole thing. We developed the use cases, right? But then from 2020 till now, we've been fighting, tooth and nail against the political world. So we have the use cases, we have the tokens, but we cannot have any value accrue to the tokens, because then you got Gary Gensler yelling at you. So we've been in this weird, like, twilight zone for 4 years, it feels like, where we know what the use cases are, like you just, said, but we haven't been able to actually connect it into the adoption and actually having, value accrue to these tokens.
And also, as we bring in AI, the velocity of business creation and destruction just gets faster and faster and faster and faster. No longer will it be available for people to IPO. It's even going to be difficult for VCs that have like this 7-year business model. Crypto VCs are used to having tokens where you can realize capital, velocity of cycle. But the only way of dealing with this is going to be ICO style markets, tokenized equity, or whatever that means, a hybrid instrument. Look, there's a lot there that I talked about, and there's plenty more other parts, but it's really simple. It's a $3 trillion, when it keeps moving every time I say this, it's now $3.5 trillion, but let's call it 3 trillion because it's easy math. $3 trillion asset. It goes to 100 trillion at least within 10 years. That's just extrapolating out the trend rate of growth. I'm not doing anything crazy, wild things. It's been growing like this. And yes, growth will slow over time, but then we've got AI agents who are going to be using this stuff as well. So fuck knows how fast this thing continues to grow. So here's this big wealth generating machine, the fastest growing asset, the best performance of any asset in history, keeps going. We get to 100 trillion within 10 years. So we're only 3% of the way there. Think of how much wealth this is going to generate for humanity. What? I'm saying $97 trillion. Let's assume you think, and probably rightly so, Raoul's an utter moron, I'm going to halve it. That's still 50 trillion, which is 100 years of value accrual of the S&P 500, of all the largest companies in America. People have no comprehension of this.
Yeah, I mean, what's the total addressable market of tokenizing assets? Like, limitless.
Yeah. Well, because if you add derivative markets, which are 1 quadrillion, FX markets, they probably trade a quadrillion a year or more. Add in the global bond market at about 300 or 400 billion, the global real estate market at about 300 billion. Trillions with a T. Global equities like 200 trillion. I mean, this is la la land. And then we haven't got the activity created on chain by agents using it for economic activity, or us putting everything, all contracts online, or us using it for, I guess deeds and stuff are contracts. But yeah, it's the architecture for the digital age. It's as simple as that. And people think it's all about currencies, cryptocurrencies and NFTs. What we're seeing is just vast, rapid experimentation with use cases. Memes are speed testing the ability to spin up a token for multiple cases, thinking about how we can tokenize culture, giving us a future work where we can be part of something. There's a lot of testing going on, but fuck me, we've battle tested these chains. I mean, they're launching 100,000 tokens a day or something stupid.
I know.
And we did the same with DeFi. We keep battle testing it, it breaks. We keep doing it and doing it and doing it really fast. NFTs, we speed tested. Okay, does this technology work? Yeah, it did work really well. But was that the future form? No, that was the first form.
And what I find really interesting is as this process is ongoing, you mentioned a bit ago about how GameStop and just how the psychology and what drives markets, it feels like has gone through a very significant change over the last few years. And that has led to, basically feels like, I don't know, since like 2018, 2019, the inception of like Wall Street bets as an idea of just like retail people coming together and viewing markets differently. If we just think about like the bell curve meme, which I know you always like and appreciate, is it feels like this shift has occurred and it's letting to traditional finance folks to keep misfiring and saying, oh my God, we have a bubble. Oh, now it's an even bigger bubble. Oh my God, now we have an even crazier bubble. But that's been said endlessly, since it just feels like what's actually occurred is there's been a tectonic shift in the psychology and perception of markets. And at the same time, you come from the TradFi world, you worked at Goldman, you ran your own fund. That is a risk adjusted world where people look at things in terms of risk adjusted returns and not trying to actually just like believe in something and take on outright risk, right? It's all about we got to be market neutral. So I'm just curious your thoughts, like have you seen that too, and what do you think about that tectonic shift in the perception of markets?
I mean, it is fucking gigantic. My pinned tweet, I wrote about this back in 2020, this or 2021, this exact phenomenon. I've been commenting on it and commenting on it. People still don't understand. Speculation is the new norm. The reason being is nobody can afford a house. It's really interesting. Every time I make a video about housing, like the clip from my Stephen, what's his name one, the Diary of a CEO, the massive podcast I was on, the clip that came out of that about don't buy a house or a house is not an investment, like 5 million views. Because people can't get to that step. So then you've got some savings, but not enough to buy the house. You're probably paying into your 401k anyway, because your employer matches it. So you think, fuck it. The only way of getting there is gambling. But we're also blessed with two mega secular trends. The NASDAQ outperforms the rest of the equity market. And these millennials discovered, the millennial cohort discovered options on Robinhood. So they super goose the performance. But they don't mind getting them wrong because they also grew up on gaming. So they understand this. I was in a documentary, it's on Netflix called The New Americans, Gaming a Revolution. It's all about this. It becomes gaming. So that is the speculative activity, and it's not going away. And crypto gave them the other way. I mean, I saw that yesterday, the XRP thing. I got that wrong, and it was stupid of me not to get the trade wrong, to not realize how many ordinary people's hopes and dreams are in that one thing.
I know. It was so obvious.
Yeah, I mean, it really is their hopes and dreams. And for me to say, yeah, I got it wrong, blah, 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 made them feel validated. Because the systems let them down. You listen to all of the XRP people's stories, and it's like, yeah, I get this. This is huge. So yes, the structure has entirely changed, which is why the left curve is the right curve. And all of the mid curve, and you and I have chatted about mid curve. The mid curve is the old way, and it doesn't work. But the mid curvers, the issue is the mid curvers get further and further and further entrenched into saying, well, it's all going to mean revert. I'm like, how can it? It doesn't make sense. Not with the debasement of currency, not with the secular trend in technology. I mean, how much capital do you want to destroy trading small caps or value stocks? Who for? A bunch of rich boomers. But most of the boomers, the median boomer in America has 150 grand in their pension, the median. Because everyone shows the average, which is like 1.5 million. The median, totally 150 grand, they're so fucked.
Mm-hmm. Mm-hmm.
It's heartbreaking.
Yeah. Yeah. I mean, I could totally feel it from just, I'm 30 years old, my friends and everybody around me is trying to get to that step of, okay, let's get a house so we can start to raise a family. And, especially here in Canada, right? That's a tough battle.
It's impossible.
Yeah.
It's impossible unless you go and live in the middle of nowhere, right?
Yeah.
And even then it's still expensive.
Yeah, totally.
I mean, Australian kids, people in their kids, people in their 30s in Australia, same. It's even more expensive, I think, than Canada. And there's just no way for them. And I get it. So the best thing to do, it's actually the intelligent thing to do, is go for a secular trend and keep taking as many bets as you can.
Yeah.
Now, the job is to try and help them do it the most intelligent way. That's what I'm trying to do. But
Yeah,
let them
yeah.
do it.
And it's incredibly helpful. And obviously you have quite the knack for being able to consolidate these ideas into punchy frameworks like Banana Zone and all of that. But maybe we can end this with a little bit of meat for the audience to just hear about where do you think we're at with that?
So we are, I mean, Banana Zone Central right now.
Yeah.
Now, I've always said about the Banana Zone is this year and next year, from now on to next year, is really hard to deal with. People think, great, the Banana Zone, we're all going to be rich. No, no, the Banana Zone is watching your friend get really rich fast and then thinking, why not me? And then panicking in to the trade he was in when you were in the right trade and then you're losing money. And then you're like, oh shit, I'm not making enough money because some bloke posted on Twitter, he made 100x in these memes. So I'm going to be looking for memes. And you go out of the risk curve. You start then like, I'm not going to make enough money in my bets. I want to start leveraging with perps. And before you know it, you lose your tokens. And rule number one of not fucking this up is don't lose your tokens. And so it's going to get really hard. I can see it happening with XRP. It's happening. Everyone's like,
Oh man.
holy
I mean,
crap.
I tweeted about it yesterday. It's just like it's hilarious, and I've to your point, like we've all been through this brutal bear market over the last 3 years. Just to have my friends text me a month ago and go, "Hey, do you, like I think I'm going to buy some XRP. You're still in that crypto thing, right?" That's like I didn't say no because I had a feeling this could happen, but it's just like fuck. Like I've spent all this time just grinding the bear market just for them to show up and just kill it.
Yeah, my yoga instructor is a good mate of mine. I've
Yeah,
got her in. I've even paid her in crypto to get to. She just pinged me this morning, going, "I made tons of money in XRP." I'm like, and I'm like, "Well, I didn't. Yeah,
yeah,
I've got a very small trade that I bought a long time ago in it, but not really. But yeah, so everybody is going to see this. You're going to lose your mind. So the banana zone is more about losing your mind and not screwing it up, which is why I keep reiterating the "don't fuck this up" thesis, because you will always feel like it's not happening to you. And then it's like, oh my God, 2 weeks of, oh my God, I'm up 100%. And then it's like, well, why are they making money? It's really bizarre. I'm sort of used to it now, but not really.
yeah.
And
Same.
you end up like with your, let's say your core bet is Sol, and before you know it, you're chipping away at a bit of Sol because you're going to try that trade, and then you can try, and then you have to stop yourself. So stop doing it. I mean, I've just done it today. I've just done another trade, which was taking Sol away. I'm like, what are you doing? But this could be a great trade. It'll be fine.
Yeah, the more you touch it, the more you lose it. Oh, I mean, yeah, to your point, like I don't know, I feel like I'm decently experienced in this whole thing, and I still fuck it up all the time. So
Yeah.
don't fuck it up, but it can happen. But at least try not to.
Just try with the most of your stuff. Don't do it. That's why I kind of give
Yeah,
permission to do it with 10% because it can all go to
exactly.
zero. The rest will make up for it.
Yeah,
But yeah, because it is fun and it's all consuming.
yeah, yeah. Just be smart about it. Look, Raoul, so great to get you back on here. Always a ton of fun to chat with you. Really
Yeah,
appreciate it.
lots of fun. Great conversation. And let's see how the banana plays out.
Yeah, sounds great.